I've been getting a ton of questions about ULTY lately, especially with the reverse split happening on November 28th. And honestly, this was the final confirmation for me that it was time to walk away. And I've been a fan. I made the money I needed to make, but the writing's been on the wall for a while now. ULTY has been one of the most polarizing and viral ETFs in 2025, and the roller coaster ride may be coming to an end. And today, I want to break down exactly what this reverse split means, what it signals, and what I'm doing from here. Let's go. Welcome back everyone. Rico here. From my experience with high yield ETFs, I've learned that income, it can be amazing until the math stops making sense. And with ULTY, unfortunately, the math has stopped making sense. So let's walk through what's happening, why it matters, and how I personally navigated this one. Remember, not financial advice. This is just my experience, my perspective, and what I'm doing next. So let me start with where I ended up. I actually came out ahead on ULTY, about $2,177 in total profit. And that's without dripping, without reinvesting. And I was lucky. The distribution stayed ahead of the price drop long enough for me to exit clean. But as you've probably seen over the last few months, ULTY's price has been getting hammered, absolutely hammered. We're talking a slide from the high teens back down to the single digits, sitting right around $3.98 as of the date of this recording. The current yield as of today is around 83.88%. Annual payout is about $3.34 per share. And the 6-month performance is not bad in total performance, up 5%. But collapsing into late November. This is the tough one. The capital gained year to date is minus 36%, and it has an internal rate of return of around 7.8%. So on paper, it still looks like a monster income machine, but the underlying weakness finally started overpowering that yield. So the other interesting fact is that ULTY's strategy, it might have worked, but they assumed many investors would drip or reinvest their distributions, which would help replenish NAV, but it just wasn't happening, and the ETF just couldn't keep up. And I think as of today, it's 100% return of capital, as before it was a 60-40, 80-20 split. So because of that, now YieldMax is doing a reverse split. And I'll talk about what that is. But first, comment down below if you're still in ULTY and what your thoughts are. I'd love to hear from you. Also, if you got out, how did you do it? What did you do? And how did you do? It was definitely a roller coaster ride in 2025. So I'd love to hear from you all and hear how you won or unfortunately maybe lost on ULTY. Now, let's get to that reverse split. Here's the simplest way I can explain what a reverse split is when I'm coaching other people. So a reverse split is when an ETF or stock, it actually reduces the number of shares you own while increasing the price per share. And this is without changing total value of your position. So value stays the same. It's just fuzzy math, right? So if ULTY does a 10-for-1 reverse split, right? So that means every 10 shares you have will now become 1 share. And then the price jumps from $3.98 to roughly $39.80. So your total value stays the same, at least for the moment, until the market reacts, right? And your yield also will stay proportional. So there's nothing that will make it move magically higher. So if it's at 83%, it'll stay at 83%. And that's important. People see the higher price and think something got better, but unfortunately it didn't. The ratios just stayed the same. And reverse splits don't really fix anything. They just hide how far the price has actually fallen for a particular stock or ETF. And why do companies do this? Like, this is the important part, right? When a fund's price falls too low, say under $5 typically, they risk actually getting delisted from the exchange. They can lose institutional credibility, where institutions will start to back out. They start losing liquidity, and they start losing inflows and people investing and cash in. So a reverse split is basically a cosmetic move to avoid that. It's almost like putting lipstick on a pig, unfortunately. It doesn't solve the underlying problem with the ETF or stock, which in ULTY's case is declining NAV and an income strategy that is just broken down. So for me, why this is a red flag? Well, from my experience, this is when reverse splits typically show up. It's already when the market has lost confidence, when price erosion has outpaced income, if the distributions just become totally unsustainable, and the fund is trying to reset optics. And unfortunately, ULTY checks all of those boxes. And just check out the chart. It tells the story. That massive distribution that once offset the decline, it's not keeping up anymore. And that was my personal exit point. And this sell-off we've seen across the market didn't help. But ULTY was falling way before this sell-off. And the reverse split just confirms that trend. And here's the part that kind of bothers me the most. YieldMax is doing this quietly. There's nothing on their website about any of these reverse splits. And there's about 12 of these ETFs of theirs that it's affecting. And there's a lot of them. And there's no mention of these YieldMax ETFs that are going through it. And just some of the ones that to mention, that maybe some of the popular ones are ULTY, which we talked about today, HOOY, RDY, CRCO, SMCY. There's a few others based on the filings with the SEC. But as you notice, there's not one announcement that sits on the news page. And so for a firm that handles all these high yield ETFs with a huge retail audience, to me, this is a huge miss. Transparency matters, and right now it's not there from YieldMax. So where I stand, ULTY was the last of the YieldMax funds that I was in my portfolio. I'm not planning on buying anything from YieldMax moving forward or anytime in the future. From my experience, their products work in a very specific type of market, but the moment that market changes or things shift, the weaknesses and the cracks show up fast. And if you know me, and you should all know me already, I'm a Neos and Round Hill guy anyway. Different quality, different philosophy, different outcomes. I prefer those outcomes. Their yields might not be as high, but for me, they've been more consistent. So what's next? I'm actually making a full video breakdown on the ETFs I'm considering rotating into after I sold off ULTY, especially the ones with stronger NAV behavior and cleaner strategies. But if you do want to see the 5 ETFs I'm investing in with zero NAV erosion heading into 2026, you can watch this video right here, and hopefully, you'll see my next video coming out soon. As always, thank you for watching. If you got value out of this video, please give it a thumbs up. Comment down below. Love to hear from you. Subscribe if you haven't already. It'd be amazing if you would share it with someone who needs it. As always, I appreciate each and every one of you. If it doesn't challenge you, it doesn't change you. Messy action is better than no action. I'll see you next time. Boom.